Well, I just learned something today. I had no idea this was even the case, but guess what? BlackRock is the hero of Wall Street. What do I mean by this? Well, let's find out. So let's go back for a second to late March 2008, and we're going to read some headlines during that time. So during 2008, BlackRock stakes place as fixer with Fed's nod. So to understand how BlackRock found itself at the center of the financial crisis, you need to understand Larry Fink's long, strange relationship with mortgage-backed securities. Fink sold his first CMO in 1983 while working as a bond trader at First Boston. He pitched this new product to Freddie Mac, which is a Fortune 500 company, as a way for the company to offload $1 billion in mortgages. Now, that's right. The U.S. government contracted with BlackRock to help resolve the fallout of the 2008 meltdown. Now, according to Vanity Fair, the financial establishment in Washington and on Wall Street believed BlackRock was the best choice for the job. The Federal Reserve allowed BlackRock to superintend the $130 billion debt settlement of Bear Stearns and AIG, or American International Group. I had no idea. So this whole time, BlackRock has been the right-hand man of the Fed Reserve. Interesting. No idea that was the case. So BlackRock was helping the world fix the issues derived from the very products he was pushing in the beginning. Full circle. Now, in 2007, BlackRock was selected by Citigroup, which is Salomon Barney, which is the underwriter of GameStop, JP Chase, and Bank of America, with a nod from the U.S. Treasury Department to manage the fund that was to have helped bail out the troubled investment vehicles. The banks then pulled the plug because the fund wasn't needed. BlackRock was also called by a local government fund in Florida to help out amid recent problems. So they were just helping out everyone. So Larry Fink, now the CEO of BlackRock, was one of the first on Wall Street to package mortgage obligations and helped popularize the new products. But he made sure BlackRock didn't suffer the kind of losses rivals like Citigroup and Merrill Lynch did. Now, BlackRock shares lost only 5% that year through Friday, while Citi shares were off 23.57% and Merrill's were down 12.7% through Friday as investors fretted about multi-billion-dollar write-downs. Good play, Larry. Now, this is the weird thing. So the current situation, we know now that BlackRock is being used by the Fed yet again, full circle, to help with the situation. They're literally acting as the Fed Reserve's financial advisor right now during these times. Now, what's even more interesting is, they're consulting with BlackRock, the world's largest asset manager. And not only did he help with the 2008 crisis, helped push the product that caused it, but now he's been helping during the pandemic and out of the pandemic. So what do you think? They hired them. They literally hired BlackRock to help calm the markets. Its ETF business wins big. That's, as we've all seen, the ETF ecosystem that BlackRock has, which they're very transparent about, is saving basically everything. Now, they clearly don't agree with the Fed on a lot of major topics. So the question remains, what are they doing? And what side are they on? They haven't really done anything horribly negative outside of conspiracy theory and talk of the World Economic Forum being some lizard people convention. Basically, he just uses Aladdin and his predictive software AI to try and prevent things from happening that could happen. He created the whole ESG scoring system, which is about the better overall state of the planet, climate, things like that. What are his true intentions? What do you think? This is a statement from BlackRock here, from Peter Brockvar. I'm sorry, he's from Bleakley Advisory Group. So the Fed is playing a game of chicken that they're going to lose, said Peter Brockvar, Chief Investment Officer at Bleakley Advisory Group. I think the Fed will be wrong on inflation being temporary. They don't want to be playing catch-up. Some leaders on Wall Street, including BlackRock, CEO Larry Fink, and JP Chase, Jamie Dimon, have similarly warned in recent weeks that inflation may not be temporary. This article is as of late July, so clearly they're not seeing eye to eye. So what is the real reasoning for all this repo demand? Because like I said, the market crashed in April. If it wasn't for this repo and BlackRock, the market would be done. So what do you think? What do you think about BlackRock? I didn't know that. I just learned something today. So let me know what you think about that. BlackRock has been by the Fed's side, helping them get out of every financial crisis since the mid-80s.